AvaTraders, and welcome to our new show, Edge on the Market, where we hope to keep you up to date on everything important happening in the markets and how you should potentially react to those developments. In today's show, we're going to be focusing on a super important topic, which is inflation. Now, it's so important because it hasn't really been this bad, especially in the US for the last 40 years. But it's also a global problem, with consumers everywhere having to pay more for the same items. Today, I'm joined by my colleague, Troy Fry. Hi, Troy.
Hi, I'm happy to be here.
Thank you. So look, let's have a little look at inflation and why it's so important.
Well, inflation in general is not a bad word. I think there's a misconception that when you speak of inflation that it's got a negative connotation to it. In general, a healthy amount of inflation means that the economy is healthy. And inflation means prices are rising, the cost of things are going up, and when there's sufficient demand, that can be a good thing if prices are rising gradually. It's signs of a healthy economy. But if inflation is too low or too high, it's signs of either too slow of an economy or an economy that's growing faster than maybe paychecks are. And in the past 12 months, this seems to be where we found ourselves, is hyperinflation, where the cost of goods and services and products are rising much faster than the average income.
So I think we can understand why that's bad for the consumer, who's obviously paying more for stuff. But what about the trader and the investor, in fact?
Well, what's amazing about trading in a market like this is it lends itself quite a bit of predictability when you have such a clear vision that this hyperinflation is existing right now. And so when you start to look for what investment assets, which tools might I invest with to go after capitalizing on this hyperinflation, there are some specific asset classes and instruments that we really tend to focus on.
Okay. Well, that brings me nicely to my next point. So how can a trader protect his portfolio against inflation?
Well, when we look at instruments or assets that investors and traders tend to run to when the fear is about hyperinflation, we're looking at what investors call safe haven assets. And so there are a number of safe haven assets that can do the trick. Specifically, the commodities tend to be a strong area where investors look when there's fears of hyperinflation, and specifically gold.
And so when you've got a competing factor, say a geopolitical driver like the war in Eastern Europe, how does that compare in terms of safe haven assets when you're looking at inflation?
Okay, so there are different types of fear that can be out there. If it's a fear about supply chains for the energy industry, then that type of fear could cause inflationary pressure on crude oil prices, for example. And so we're seeing a lot of that, a lot of bullishness with crude oil with that particular situation. And so there are other reasons, other stimuluses for inflation as well. For example, ultra low interest rates to try and help the economy out with the COVID-19 pandemic, and also a lot of central banks printing money, giving out stimulus packages in the billions and even trillions around the globe. And so these sorts of pressures also can cause inflation, meaning weakening the currency and thereby causing what used to cost $100 might cost $110 just 12 months later.
It's said that the markets, the investors became somewhat addicted to stimulus. So that now that the central banks are pulling it back, what does this mean for investors? Are they sort of freaking out about it? Or?
Yeah, it's exactly right. You can only hold interest rates at zero, and even in some cases below zero, for so long. You can only keep propping up the economy for so long until inflation outpaces income so much that the buying power of your currency is so low that it starts to hurt the economy more than help it. And so the stimulus was intended to help the economy, but when the buying power is so weak, you have to take measures then to stave off some of this inflation. And you're exactly right. increased interest rates maybe are coming soon in many areas around the globe. The US specifically has promised maybe 4 or 5 rate hikes. Now that can change, obviously, with geopolitical situations, but when people are fearful that the cost of doing business might go up, the cost of borrowing money might go up, then the opposite of inflation can occur. Folks start rushing out of riskier assets and maybe buying into those traditional safe haven currencies like the US dollar we've seen strengthening of late, the Swiss franc, etc.
One topic that you'll likely come across in your trading career will be value versus growth stocks, and it's an important area to understand. So Troy, can you just define the difference between value stocks and growth stocks for us?
Well, a way to make it simple is to just kind of use the words that define those categories. So if you picture a stock like Apple, for instance, that has held a lot of value in a stable way for a long period of time, you can think of those stocks as value stocks. And those are holdings like Warren Buffett has in Berkshire Hathaway. I think it's something like 7% just on Apple as a value stock because of its stability. And when we're talking about growth stocks, you can think of maybe newer companies that have come in that have a much larger potential for rapid growth, but also maybe a little bit higher risk in terms of potential pullbacks.
So we're really looking at the Dow Jones for value and the NASDAQ, say tech stocks for growth.
In a general sense, you could think of it that way. The Dow Jones lending a bit more stability and the NASDAQ maybe having higher potential for growth. I wouldn't say all of the companies in the NASDAQ would be classified as growth, but certainly a number of those tech stocks would be.
During the coronavirus, the pandemic, the growth stocks had an amazing time. I mean, not all of them, of course, but a lot of them. Think about Zoom. I mean, it had its heyday during the pandemic. So what about in times of inflation like now? Which is the side to err on?
Well, I'll tell you, that's a really good example when we look at Zoom as the potential value of a growth stock, but also the potential dangers of a growth stock. Because what we saw with Zoom through the pandemic is workplaces and other areas of the economy went remote in terms of communication and work and getting things done. What happened was there was such an increased demand for that type of high-tech product that those growth stocks really went through the roof. And if that was part of your portfolio, tremendous. At the same time, an example, as the economies have opened back up, you can see the opposite happen with something like Zoom losing value rather quickly as well. So some of it is timing and also the ideas of diversification.
So obviously the show is about inflation. So let's just bring it back to that and to Coca-Cola. So inflation probably means that the price of Coca-Cola is going to go up. Consumers are going to pay more as retailers pass the burden on to the consumer. How is this likely to impact the stock price? Again, bearing in mind you're not a fortune teller and we can't give advice to our traders.
Okay, so what we've seen is with value stocks such as Coca-Cola, that their longevity in terms of their price and their stability is better, as we've said. With too much inflation, the value of the stock was rising, as most all stocks were rising with inflation because the currencies were getting weaker. So you needed more of those dollars, more of those euros, etc., to buy any one of those stocks. Now, as measures are taken around the globe by central banks to raise interest rates to try and get rid of some of this hyperinflation, you're going to see more and more of an exit out of the riskier growth stocks and maybe a bit more stability in the value stocks. And so we would expect Coca-Cola, for example, to fare much better.
Potentially.
Potentially during this type of exodus to maybe fare better than something like Zoom, which rose so quickly but could come back down quickly as well.
For an investor, it's really important to be able to outstrip or outperform the global benchmark indices like the S&P 500. So now we're going to look at some of the potential hidden gems an investor or indeed a trader could look for and find. Can you help us with that?
Yeah, I certainly can. Typically, if we're looking at, let's say, Forex currencies to trade on, you're looking at countries maybe that are emerging markets where there's a larger potential for more rapid growth. Or if we look at current times with all the high inflationary fear and the expectation of interest rate increases coming in different nations around the world, you could look at markets that are more traditional markets to invest in, like the US, as we've seen the US dollar index strengthening quite a bit of late as there's anticipation of increased interest rates coming with the anti-inflationary move. So that's a direction you could go. Now, if we're talking about stocks, we could look for a hidden gem in stocks as well. With the whole COVID situation, we saw some stocks rise quite rapidly. And if we take a look at, say, Alibaba, it's actually had a pullback from its peak and was up somewhere around 300 a share, I believe, and has pulled back somewhere near just above 100 a share now. Alibaba is the second largest online retailer with their nearest competitor, Amazon. And so while Amazon, their price to earnings ratio in terms of the price of their share compared to their earnings values, Amazon's is much higher compared to Alibaba, which is respected as much as Amazon, but the price to earnings ratio is in a much more advantageous spot for investors that might be looking to invest in stocks.
So really we're looking for value and undervalued stocks. Now we know with Chinese stocks, such as Alibaba, which had trillions of dollars wiped off of its market cap because of regulatory pressures coming out of China. So is that not still a risk though?
It's something to consider for sure. You have to look at all the fundamentals around each stock that you're going to get into. A lot of investors are looking at Alibaba as a potential, but certainly you have to take into account all of those types of global factors.
Another stock we came up with when we were looking for companies with really strong fundamentals was Autodesk. What's so appealing about them?
Well, what's nice about Autodesk is it, not that long back, had reached some nice highs, above 300 a share, and in recent times has pulled back a good bit and is actually nearing a support level, lows of which we haven't seen for about 52 weeks, so a 1 year time period for the lows. And so this, along with the volatility that seems to be pretty high on this particular stock, lends itself to the potential for large potential profits. And with that volatility, you just need to make sure you manage the risk side accordingly, and the good potential for profit is there.
Okay, and I know I keep saying this, but obviously it's not our job to give you trade ideas, but what we are doing is perhaps highlighting stocks that you should look at. Just check out the charts. Okay, let's get down to the nitty gritty now. And what we're going to do is we're going to take a look at a portfolio and we're going to see what adjustments we can make to it to account for things like inflation and rate hikes. So can you help us with that?
Certainly, and really it might sound more complicated than what it is. What we can look at are the stocks like Groupon and Zoom as being growth stocks that, sure, it was great while the market was hot and they were growing faster than your average stock. But now in the current environment of fear and hyperinflation, perhaps you want to transition out of those types of growth stocks into stocks that are a bit more stable, the stocks that we call value stocks like ExxonMobil, Johnson & Johnson. So you might make some switches such as that. Now, if you're holding value stocks already, like Facebook or Apple, these sorts of stocks you could probably leave as is within your portfolio.
Okay, that was easier than I imagined.
Absolutely, and so sometimes the simpler ideas work well, and you don't have to get so extravagant to manage your portfolio under these types of market conditions.
Okay, so we're going to pivot across now to the Forex markets or the currency markets. What can people trade with AvaTrade, especially in times like now with inflation? Well,
the great thing with AvaTrade in terms of the instruments is the large variety, and so we've got CFD instruments on many currencies from all around the world with your standard typical pairings like Euro USD, as well as more extravagant currency pairings that you might be interested in trading. And so you certainly won't get bored with your selection when you're trading on these.
And of course, the ability to use leverage too. And also one more thing I just wanted to mention, which is a very unique tool that AvaTrade offers, which is worth knowing about. It's called AvaProtect, and it's basically a risk management tool. So it allows you to manage your risk as soon as you place the trade, which basically protects your trade against losses.
Yeah, exactly. The AvaProtect feature is a unique tool that is part of your larger risk management strategy. And with this tool, you're able, for a small premium cost, to protect your entire investment for defined periods of time. And so, especially in times like we have now, it's important to feel comfortable as you make your investments that your risk management is on track. And this is one advanced tool that helps you do that.
And before we say goodbye, let's just take another quick look at cryptos, if we may. So cryptocurrencies are not generally considered a hedge against inflation. And in fact, they gave back all of their gains of 2021, coming into 2022 when we saw heightened inflation.
Certainly, and what we saw first was the rush up in value as the currencies were inflating, meaning the currencies were weakening. And so as the cryptocurrencies are paired against these weakening currencies from around the world, they were able to rise in value that much easier as an instrument that people like to invest in when the fear was a bit lower. And so with the ultra low interest rates, with the stimulus packages in the billions and trillions, as we have discussed, the fear was relatively low and cryptocurrencies went up quickly. And what we've seen as the inflation is viewed more and more as hyperinflation, as a bad thing, and the expectation of interest rate increases are being raised all around the world, then the fear sets in for these instruments that rose so quickly with the high inflation that you need to get out of them as the anti-inflationary measures have been kicking in. So we've seen the cryptocurrencies drop significantly and perhaps are at prices that could interest investors once again.
Okay, well, here at AvaTrade, we obviously offer leverage on cryptos of up to 1 to 5, so 5 times. But there are also other ways to gain exposure to cryptos. Can you give us some of those?
Well, with AvaTrade, we have a Bitcoin ETF, which may be available in regions even where cryptocurrencies aren't available in some areas around the world. And then we also have the Crypto 10 Index, which we talked about the value of the S&P 500 index and diversifying with stocks. It's the same idea. You can diversify with your cryptocurrencies in a single index, which is our Crypto 10 Index.
And presumably those, along with the Bitcoin CFDs, give you the ability to gain exposure to Bitcoin and other cryptocurrencies without having to actually buy them outright, without having to worry about storage and all of those kind of hassles too.
Absolutely, that's a very good point. And that goes back to our point that we talked about earlier with CFD trading. It's one of the major advantages that you're trading on an instrument without having to hold or own that instrument in any type of long-term manner. So you don't have to hold coins through pullbacks in the market like occurred recently. You can buy and sell at very little cost and get back in when you're ready.
And of course, the other thing I want to mention is the fact that AvaTrade is so highly regulated, like across the globe, whereas a lot of the crypto exchanges and even the wallets are not regulated. So that's another benefit there.
Yeah, absolutely. You have the sense of security knowing that you have these regulations throughout the world that are keeping an eye on the industry. And that's why we value so much at AvaTrade, making sure that each region that we work, we have the appropriate regulations and oversight.
Thank you so much, Troy. It's been really enlightening. And thank you guys for watching the show. And remember that all the assets that we've discussed today can be found on our trading platforms. So there's really only one thing left for you to do, and that is to sign up for an account, to register, and to start trading on our platform. There's never been a better time. So don't wait around. Whether you have $100 to trade with, $1 million, it doesn't matter. Trade now. Thanks again. And remember, education is so key to trading. And that's why we have an amazing academy. We've got a YouTube channel full of videos. We've got articles, trading alerts, and so much more. So thanks again for watching. And thank you, Troy, for participating.
It's been my pleasure, and good luck with your trading, everybody.
And we'll see you again next time. Bye for now.